Hey there, Iguanas. Iggy here, and today we're diving into the financials of Geo Energy Resources Ltd, a Singapore-based coal mining and trading company. As always, we'll be looking at the key metrics and factors you need to know before investing. So, let's get started. First off, let's talk about what Geo Energy actually does. The company, which was founded back in 2008, is primarily engaged in the mining, production, and trading of coal. They operate through three main segments: coal mining, where they produce and sell coal from their own mines; coal trading, where they buy and sell coal from third parties; and mining services, where they provide mining contracting and project management services for other mines. We'll look at metrics like assets, liabilities, debt ratios, and more to see if there's a hidden gem waiting to be unearthed. It's like going on a treasure hunt, except instead of X marking the spot, we're using balance sheets and income statements to guide us. So strap in and get ready to do some financial sleuthing. Now, let's take a look at their recent financial performance. As of the latest reported quarter, which is Q4 2023, Geo Energy's share price stands at 37 Singapore cents, giving the company a market capitalization of around 519 million Singapore dollars. In terms of their income statement, revenue for the quarter came in at 138.2 million Singapore dollars, which is actually a decrease of about 31% compared to the same quarter last year. However, they did manage to reduce their operating expenses by 46%, bringing it down to 14.51 million Singapore dollars. As a result, net income for the quarter was 22.51 million Singapore dollars, representing a 13% increase year over year. Net profit margin also improved significantly, expanding by 64% to reach 16.29%. The one concerning figure is EBITDA, which declined sharply by over 90% to just 4.13 million Singapore dollars. This is definitely something we'll want to keep an eye on. So, how does Geo Energy's valuation stack up? Well, with a market cap of 519 million Singapore dollars and trailing 12-month earnings of around 85 million, the company's shares are trading at a price-to-earnings ratio of roughly 6.1 times. Compared to other coal mining companies, this actually looks relatively cheap. However, there are some good reasons why the market is assigning a lower valuation to Geo Energy. One of the main concerns is the company's depleting coal reserves. Based on their current rate of production, Geo Energy's SDJ mine is estimated to have only about 3 years' worth of reserves remaining, while their TBR mine has around 8 years. This uncertainty over the company's ability to replenish its reserves is likely weighing on the stock's valuation. There are also a number of other key risks to consider. Geo Energy's profitability is highly dependent on coal prices, which can be quite volatile. The company's cash mining costs have also been increasing, putting pressure on their margins. Additionally, they may need to raise capital to acquire new reserves or mines, which could dilute existing shareholders. And finally, with the increasing global focus on sustainability, the long-term demand for coal is coming into question. In any case, let's review these 6 slides for a better sense of where Geo Energy is headed. Slide 1. Let's start by analyzing the stock's recent performance. As you can see from the chart, RE4's share price has been pretty volatile over the past month or so. It peaked around $0.425 in early February, but has since declined significantly, currently trading at around 34 cents as of the market close on March 4th. The 52-week trading range of 20 cents to 45 cents shows just how wide the swing in valuation has been over the past year. The beta of 0.79 suggests the stock is slightly less volatile than the overall market. Now, a bit about the company itself. Geo Energy Resources is an investment holding firm that operates as a coal producer and mines contractor. It has a market cap of around $475 million and an enterprise value of $210 million. The company is sitting on $234 million in cash, but also has a hefty $3.42 billion in total debt based on recent filings. No earnings per share or dividend estimates are provided for the next reporting date in May 2024. As for the analyst consensus, the overall rating on RE4 is neutral with a smart score of 6 out of 10. The consensus chart leans slightly bearish, indicating more analysts currently rate the stock as a sell compared to a buy recommendation. In summary, RE4 has seen its stock price decline recently after a run-up earlier in the year. With a neutral analyst rating and lack of near-term earnings visibility, the market seems to be taking a cautious view on the company's prospects for now. Slide 2. Based on the comprehensive technical analysis overview provided in the image, Geo Energy Resources Ltd. (RE4) appears to be performing reasonably well from a technical perspective. Here are some key observations. The pivot point values for both classic and Fibonacci strategies indicate potential support and resistance levels that traders can use for entry/exit signals. While most of the moving averages are showing a sell signal currently, the longer-term 100-day and 200-day simple moving averages are indicating a buy signal. This suggests that the long-term trend for RE4 stock may still be positive, despite short-term selling pressure. The MACD indicator is showing a buy signal, indicating potential bullish momentum building up. The Williams %R indicator is also showing a buy signal. However, other indicators like RSI, stochastic, ADX are showing neutral signals, suggesting a lack of clear directional momentum currently. The ROC indicator is showing a sell signal, indicating the stock's rate of change has turned negative recently. Overall, the mixed technical signals suggest that while RE4 may be facing some short-term selling pressure, the longer-term trend still appears to be positive based on the moving averages and a couple of momentum indicators. Traders would likely want to watch for a potential bullish reversal signal or confirmation from other indicators before taking any significant positions in the stock. It's important to note that technical analysis should be combined with fundamental analysis and other research to make informed investment decisions. The data provided gives a snapshot of RE4's technical condition but does not provide insight into the company's underlying business performance or valuation metrics. Slide 3. The one-year candlestick chart for RE4 shows significant volatility in the stock price over the past year. The current price of around 0.34 SGD appears to be near the lower end of the 52-week trading range, suggesting potential undervaluation compared to the highs reached earlier in the year. However, short-term price movements alone do not provide a complete picture of the company's performance. Technical analysis indicators and fundamental data are needed for a more comprehensive evaluation. Some media reports indicate that RE4 is an Indonesian coal producer that is doubling down on coal production, despite environmental concerns. The company seems to be capitalizing on continued coal demand in Southeast Asia in the near term. However, reports also suggest that RE4's stock may be undervalued compared to its intrinsic value estimates, with potential upside of around 56, said on one analysis. Overall, while the technical picture is mixed, RE4's longer-term prospects may be positive if coal demand remains robust in its markets and the company executes its growth plans effectively. However, the environmental concerns around coal could pose risks in the longer run as the global energy transition accelerates. A balanced analysis considering both technical and fundamental factors is advisable before making any investment decisions. Slide 4. The earnings data screenshot shows that for Q1 2024, Geo Energy Resources is expected to report earnings per share (EPS) of 4 cents, which is the same as the last year's EPS for the same quarter. However, there is no consensus EPS forecast available from analysts for the upcoming quarter. The revenue history chart indicates that RE4's revenue took a dip in 2020, likely due to the COVID-19 pandemic's impact, but has been gradually recovering since then. The estimated revenue for Q4 2023 is around $0.05 billion. While the exact figures are not fully visible, the dashboard suggests year-over-year revenue and EPS growth percentages, implying that RE4's financial performance is improving compared to the previous year. The candlestick chart shows RE4's stock price movement over the past year or so. The current share price is around 34 cents, which is near the lower end of the 52-week trading range of 21 cents to 45 cents. The chart displays significant volatility, with the stock experiencing sharp upswings and downswings throughout the period. This could be indicative of the cyclical nature of the coal mining industry that RE4 operates in. Overall, the technical analysis paints a somewhat mixed picture, with some indicators suggesting potential buying opportunities based on the longer-term trend, while others indicate short-term selling pressure. Slide 5. The company is expected to pay its next dividend of NLT $0.01 per share on May 9, 2024. This dividend payment will be made annually on May 17, 2024. The projected dividend yield for the upcoming payment is a very high 14.59%, significantly above the 3.75% average for the energy sector. The payout ratio is forecasted to be 53.94%, indicating that over half of the company's earnings will be distributed as dividends. The dividend growth period is listed as 10 months, suggesting the last dividend increase or initiation occurred around July 2023. Looking at the historical dividend amounts per share in the chart, the dividend has remained flat at around 4 cents per share from April 2022 to May 2023 before decreasing to the projected 1 cent for May 2024. The substantial drop in the dividend amount for 2024 could indicate challenges in the company's financial performance or a strategic change in capital allocation priorities. Overall, while Geo Energy offers an attractive dividend yield for 2024, the significant cut in the dividend payment amount raises concerns about the company's future profitability and cash flows that will need to be monitored closely by income investors. Slide 6. The balance sheet data provides a snapshot of Geo Energy Resources Ltd's financial position over the past few years. Total assets have grown steadily from $491.32 million in 2019 to $563.03 million as of Q4 2022, indicating an expansion of the company's asset base. Total liabilities declined from $368.03 million in 2019 to $154.74 million in Q4 2022, suggesting the company has paid down some debt over this period. Total equity, shareholders' funds, has increased significantly from $123.28 million in 2019 to $408.29 million in Q4 2022. Driven by the reduction in liabilities and growth in assets. The debt-to-assets ratio peaked at around 80% in 2020 but has since declined to around 27% as of Q4 2022, indicating a much healthier balance sheet position. Similarly, the debt-to-equity ratio has dropped from over 300% in 2020 to under 40% in the latest quarter, as equity has grown while debt levels fell. The improving debt metrics suggest Geo Energy has focused on deleveraging and strengthening its capital structure in recent years. This provides greater financial flexibility going forward. In summary, the balance sheet shows a company that has grown its asset base while paying down debt aggressively, resulting in a sturdier financial profile backed by a higher equity base. Investors would likely view these trends positively from a risk perspective. Overall, the financial metrics show Geo Energy Resources has strengthened its balance sheet considerably by paying down debt while growing its asset base. This provides greater financial flexibility. However, the coal mining business faces long-term challenges from the global transition towards renewable energy sources. As a coal mining company, Geo Energy's prospects are tied to coal prices, which can be volatile based on supply/demand dynamics. The company operates in a single sector, coal, which increases its business risk compared to diversified companies. Environmental and sustainability concerns around coal could impact future demand and regulations for the industry. Investors would need to evaluate if the current valuation adequately factors in these risks and potential growth constraints for the coal industry. Thorough due diligence on the company's specific growth plans, cost position, and capital allocation policies would be warranted before investing. There you have it, folks, my full analysis on whether Geo Energy Resources Ltd is an undervalued coal stock or not. I hope breaking down those financial numbers helped demystify how to evaluate a company's true worth. If you want to continue leveling up your investing skills, be sure to smash that like button and subscribe to the Investing Iguana. I'll keep dishing out more tips and breakdowns to put you on the path towards financial freedom, and don't forget, you can join my private investment community by signing up for the newsletter link in the description below. It's a great way to get even more in-depth analysis and engage with fellow money-minded iguanas. Until next time, stay green and keep growing that nest egg. This is Iggy, over and out.